Breaking news, the Fed met today. It's in the press statement, the second paragraph. Recent global economic and financial developments may restrain economic activity somewhat and are likely to put further downward pressure on inflation in the near term. Funny, we thought global financial markets had settled down. Or is the Fed waiting for the China Purchasing Managers Index to come back above the 50 line? As far as inflation, downward pressure on inflation means nothing for the economy. Won't hurt car sales, lead to job layoffs, weaken growth, nothing. Irrelevant. This is now the most cautious, overly risk management oriented Federal Reserve in history. They aren't done yet. They just won't stop easing. The Greenspan and even Bernanke Feds wouldn't stop fighting inflation, and the Yellen Fed won't stop fighting unemployment. The domestic labor market isn't good enough for them yet either. At the June meeting, full unemployment was 5.0%, and now today the goal line is lower, 4.9%. Unemployment is 5.1% in the latest report out on September 4, so they won't lift rates. Further to go. Unbelievable. It does look like they are signaling, it does not look like they are signaling they are going in October either. They did not change the balance of risks. They say these are still nearly balanced. They did not drop the word nearly. They added after the nearly balanced that they are monitoring developments abroad. Nice. Fed policy is held hostage by events outside our borders. They mentioned it twice in the press statement. Not sure what they want to see happen globally before normalizing rates here. What else? 13 out of 17 still see a rate hike this year, slipping a little. In June, 15 out of 17 did. We lost a couple of votes. Based on their 2015 year-end Fed funds rate forecasts, 6 out of 17 think the Fed funds rate will be at least 0.75% at the end of the year, which means 25 basis points in October and another 25 basis points in December. We've seen this movie before, however, and these hawks are unlikely to prevail. Yellen is holding the cards, and we wonder how solid the other group of 7 doves are who want to raise rates in December. Could they eventually join the 4 others looking for liftoff in 2016 or 2017? Net, no Fed liftoff today, even if policymakers seem to seriously consider it. The sticking point seems to center on 3 factors. 1, global risks. 2, they have less confidence that inflation will reach its 2% target in the next couple of years, in part due to heightened global risks. 3, they lowered full unemployment a little. The goal line was 5.0%, and now it looks like they are holding out for 4.9% or even 4.8%. All the words in the press statement can be summarized by the year-end votes on interest rates. 6 see October and December hikes. 7 see December liftoff. And 4 don't see it happening this year. 6, 7, 4. The committee of 17 is split, but it looks like December liftoff is the midpoint. Repeating the news today, at the moment it looks like they are not thinking of going before December. The Fed sees uncertainty out there, so they're going to sit on the sidelines for a while longer. Go back to what you are doing. Liftoff is 3 more months away, December. Don't bet on it yet.